Hello guys, can you hear me? Let me know if you can hear me. I'll get started. All right, Rich, thanks. I just did this out of the blue. I had some stuff I was looking at. Wanted to alert my members to it, but I just figured, I just post this on YouTube. So I'm going to talk about that. So welcome to my live stream, guys. This is going to be something I try to do more often. It's just a bit delayed. Yeah, we'll see. I don't know. First time trying it, so hopefully it comes out good. We can make some adjustments as we go through, but get this first one under us. You can hear my mouse clicking. It's not clicking yet, so I don't know what you hear. Might be a mouse running around somewhere. Now it might be clicking, but anyway, let's get started here. I want to talk to you about some opportunities that I see in the market. I'm going to go over a couple things here. I'm going to look at a few pairs right here. You can see everything in green I'm going to look at. So we'll be here for a little bit. I'm going to look at everything here in green because those are the ones that I went through and thought I could see something and talk about something that I saw with the market. So basically, first we're looking at Australian dollar. I'm using Ichimoku. Not going to go deep into the theory stuff, just going to be basic Ichimoku because we see some market structure going on here in a lot of these markets, and we want to be able to just get some of these trade opportunities. So I'm looking at the monthly time frame with the Aussie CAD. I want to break this down to a lower time frame where I'm going to get into a trade. I'm going to be looking at basically getting in on a daily time frame. But look at the market here. You could see what's happened here. You got a TK crossover that's bearish. Your cloud is bearish. Now, when I see a cloud like this, though, this is what scares me because you get a flat cloud that's thick and rolling over. Pretty much lets you know the market is changing direction a little bit. But we did have a good change here. You could see that move. And then I think the market's going to retrace. So I'm looking for that retracement level back to the structure level back here, which is right here at this lower level here. That's where I'm looking for it to retrace. Let's go to the weekly time frame real quick. You can see the market starting to break down. So a big thing is you got a big rejection candle here. All right, with that rejection candle, you were breaking highs. You were making new highs, higher highs. But then the market decided to fail with a rejection. And you've been making lower highs and lower lows. Now we failed right here, so we're trading inside right here. I call this inside trading, where you're inside. We're inside one candle or two candles or whatever. So you got really basically a mother candle. But a big thing is that you could see this big C clamp. See this C clamp? So whenever you hear somebody talk about a C clamp, that's because there's no such thing as a C clamp in Ichimoku. You'll never hear somebody like Gochu Hasada never said anything about a C clamp. So that's something that I made and developed because what I could see was when this distance was so big, it just looked like a C clamp, doesn't it? So with that looking like a C clamp, what happens is Kijinsen flattens out. There's disequilibrium in the market. The market probably drops. Now, what happens most of the time is the market's gonna range or drop. More than likely, you're gonna see the drop. So there's a couple levels that I look at. I look at these structure levels to where the market's gonna drop, and then maybe we see the market continue to the upside. But one of the levels that I'm gonna look at is right there. And then here's another level. I like to make these zones right here. So let me make this into a zone real quick. See what kind of retracement we get. So I always look at this retracement back to this level here. So we're going to see if the market's going to pause here or if it's going to keep dropping. I think that it would drop down to this level here where you're looking at basically about 91,371 with this level right here, where you can see this support level. Now this is a structure point that I'm looking at for the market to pause in. So what I do now, since I know it's going to be like a correction and then maybe the big run, so with this correction I'm looking to get into the short trade. So I'm going to go to the daily time frame. If the market's not going to go to the downside, I'll know. So when I go to the daily time frame, I'm going to be looking for the market to violate these levels. Now let me take this off my chart real quick because I want to show you some things. Take this off the chart. I really wish I didn't have these levels in here, but I'll talk about those. as you can see, I'm in this trade right now. You could see right there, Aussie CAD. You could see that dollar sign. That lets you know I'm in that trade. I'm in this trade from this point up here. So you probably wonder why I got into an Ichimoku trade short while everything was showing me a long trade. Well, I got a TK crossover. I got Chico span below price. But what I also have was I look at these fractal breaks. So we broke this fractal. And I call that structure right there because looking at the market, you pretty much don't violate fractals to the downside in a bullish market unless this is going to be like a weak move. All right, but when the market's trending strong, you usually don't violate these bear fractals. So that was a big sign for me, and when it violated, it comes back and corrects itself. So it corrected at that level. What I did, I draw this zone. I put my entry at the middle of the zone, and I'm in the trade right now. So I'm still looking at possibly being able to get into a trade now again because we got a rejection at this level here. All right, and we're basically rejecting this support level, this resistance level, and an opportunity to move even lower. Now we don't have everything on Ichimoku telling us short, but Ichimoku's not the god of trading. All right, it's not the say so. What is the say so is the price of the market. All right, what you see happening with the structure of the market. So if I took everything off my chart, you would see that these fractals matter more because the market violates these fractals, and that shows me structure. All right, so with that structure, I'm seeing where the market's going, what it's doing, and I'm also just looking at a rejection here and a possible short. Now we need to get through this level because if we can't get through this level, this is going to be like fluctuation level. You'll probably start to see maybe some kind of maybe a Y wave, maybe, because I see this starting to develop. But I think if we could get through there, you'll see this thing drop even lower because what's telling me the possible drop, guys, is just looking at these higher time frames. Then you go to the weekly time frame. And you can see we reject it. Now, are we done dropping? I don't believe so. I think we could drop even more, and that's why we have this big gap here, this equilibrium. Look on this chart. Do you see a big gap like that anywhere? Anywhere. And where you do, what does the market do when you see that big gap? It corrects itself. Look at this big gap here. I don't even know if it was as big as the previous one, but it's close. But look at this gap, and look what the market did. The market moved up. Okay, that would have been a big sign for me. But people would have been saying, why are you taking a long trade on Ichimoku when everything's bearish? Well, because I'm taking a long trade on Ichimoku when everything's bearish because Ichimoku's giving me some signs. All right. But anyway, I also just look at the market. So that gives me the understanding of what's happening with the market. Now, let's go back to the daily. What I do have here, I do have my observation theory drawn in here. So I have my observation level. So really, guys, if you don't know Ichimoku observation theory and all that analysis stuff, you don't have to know all these deep theories because really some of the things that we talk about, just regular traders, 1-to-1 ratios, if you talk about a measured move, or AB equals CD, or 1, 2, 3, 4, or 1, 2, 3, that's going to be the same thing as an N wave, as an N level. All right, because this is a 1-to-1 ratio move right here. So if this market makes this leg right here and then makes the same leg again, it'll move to this level. That'll be my target for this trade. If it's going to be better than that, it'll get to the V level and the E level and so forth. Now the market will continue probably back to the upside, but I'm looking at the shorter term move here. And again, looking at this monthly, you can see we're pretty bearish. This could be just a correction. Let's go to the weekly real quick again. And we are still even bearish on this chart. Now we just had this move. This is a big structure move though, violating this level. What we did right here, we violated that level. That's a possible change in direction. All right. So that's what I'm looking at. Possible trade opportunity for you guys if you like. I'm going to move to the next, which is going to be the Aussie Swiss franc. Almost kind of like the same things developing here. I'm going to go with the monthly time frame first. Any questions, just let me know. I'll answer your questions. Look at the market here. This is a bearish market. There's no bullishness on this market. It's bearish on the monthly time frame. All right. look at this level right here. See where I have this zone drawn? The market came up to that level, rejected. Now I use a lot of trade alerts, okay? So I need to be alerted when the market gets to a level for me because I'm looking at shorting this also. So I put an alert where the level is that I'm going to start paying attention to the market because I can't catch all these markets unless I put in some trade alerts, right? So looking at this, you could see I got this level here. We rejected that level, and then we also have another rejection candle and then a little bit of an indecision candle. The market's probably going to close in this is the monthly, so we got a couple more days here. And then this might end up as an indecision candle. I'm looking at below that level is a good entry point for us to short and continue with the trend. Now, we haven't violated any bull fractals, which changed structure for me without any indicators. When I go to the weekly time frame, you can see what the market's doing here. Now on the weekly time frame, we violated this fractal right here. So our drop might not be deep, okay, and it may start a new trend from the weekly time frame. And what I like to do there is this is going to be a level that I'm going to be looking at the market pausing at, or maybe Kijinsen. All right, so the market may just only drop into this area, this whole zone, but it's a big zone because of the big wick. So I'm going to take that off the chart for now. And then I'm going to go to the daily. If I'm looking for that, then I need to see the market violate this point here. I got it drawn into a big box. What I like to do when I see the market doing this, when you see all this crossing over and Ichimoku junk, you can't really trade it like that. So what you do is box this in. I don't have it boxed in to show you, but you box it in, go to a smaller time frame and trade it. Trade these upper and lower levels and you'll get these trades. Now I'm looking for the market to violate this lower point. That's why I have an alert right here. Because if it violates this lower point, then we're going to see this thing drop for a little bit. Because again, what did we have here on this weekly time frame? We got a big C clamp, big distance. You don't see that on the charts, guys. It's a big sign for you. It's a terrible thing to be going long at this point. Or if anything, just sit still. But I would prefer to go short once we violate this level because we're boxed in here and we drop to the downside. We got rejection here. Never violated that rejection high. Really staying at these lows. We need to see that drop below that, and then you probably see the market drop. All right, so that's what I'm looking at. Daily time frame. What I'm going to really look for on the daily time frame, I don't always catch it. I don't really trade the breakout. Now if you're a breakout trader, you could trade that breakout when it develops, but what I look to trade, guys, is the break and the correction. So my trade will be pretty much like this. We break, say we break tomorrow or whatever. Actually, I don't want that. Let's say we break. We break, then I wait. I'm patient. I can chill out and wait. Impatient traders just jump at this like crazy. And then I just wait for that right there. And then I wait and the market gets in there and it forms another N wave for me to the downside, know where my targets are and everything else. All right. So that's where I look to get into the market right there. I don't really like to take the breakout trade. I won't take this breakout trade. I'll take the bounce back at the level. All right. Because a lot of times the market's going to do that. Come back to the level. Then you get an opportunity to make that trade. All right. So that's what I'll be looking for at that point. So right now I'm just kind of sitting still on Aussie Swiss franc, Aussie yen. A lot of these Aussie pairs doing the same thing. Now this one is a little bit different. Let's go to the monthly real quick. Now this isn't confirmed yet because the monthly candle's still going and it's still showing a strong candle to the upside. Not a strong one, but it's still pushing to the upside. Now we had rejections the previous 2 months, but we never closed above that rejection. See that rejection right there? We haven't closed above that, and that's vital. So I want to see the market stay below this level by the end of the month. And then when I go to my weekly, and also looking at this, you haven't violated any bull fractals. I'm going to show you when you trade a trend. Let's go to the daily. I didn't set this stuff up because this is the way the market does, and I don't never know what's going to happen, but I count on these fractals to tell me what to do with the market. I don't need Ichimoku. All I need is these fractals. And if you pay attention, has the market closed below any of these lower bear fractals ever in this trend to the upside? It hasn't. It has not closed below any of these fractals to the upside. Now this isn't something guaranteed, but this is something high probability. So when it doesn't close above this fractal levels, I mean below them on this point, then the market's bullish. You can keep running because it's closing above the bull fractals. All right, it's closing above these bull fractals. So you don't want to be shorting the market pretty much. But now what I'm looking for, I really would look for a violation of this first fractal. Now the market may make a new fractal, or it may range up here, so it could change everything that I'm talking about. But if the market's going to bounce off of this upper level, let's go back to the monthly. This is the level that I got this from. Now this is too big of a wick, so I just drew it on the upper body. As you can see, the level here, it's a good support and resistance level, and you can see what you got in this area previously. All right, and that's where the market is. You can see what you got previously back here. So you bounced on this level a bunch of times, then now you broke the level. What did I tell you guys I like to wait for? See where the market broke this level right here, and then it came back to the level right here, and then gave you a bearish engulfing and dropped to the downside. That's why I'm patient, because the market gives you opportunities. You don't have to worry about missing a trade, because you'll get opportunities. If you're worried about missing trades, you're going to probably blow your count, because you got to get in every trade that you see running. But my thing is, stick to my plan. My plan is when it comes back, I get you. If it doesn't come back, I miss the trade. I wait for the next one. All right. But now the market's back at this level again for the second time. And now I'm looking for it to drop. And that's why we're here today, because I want to let you know. When I go to the weekly, you could see again, we had a rejection candle that didn't pretty much came right up to that level. But from that rejection candle, the 1, 2, 3, 4, 5 weeks later, we have not violated that high. All right. Now we're inside trading right here. We need to break out. So we need to see the market close below this level for the market to start falling to the downside. When you look at this, you do got a big C clamp. You got a flat Kijinsen. So a flat Kijinsen, no momentum in the market. You got a flat Tenkan-sen pretty much on the weekly time frame. No momentum in the market. You do have a bullish cloud. Your future is bullish. Chico span is above price. So probably just going to see a correction. All right, and if you're a fib trader, you can put your Fibonacci retracement levels on here, and you can find out where the 50 level is, 38.2 and so forth, and trade that way. I really don't need to do that. Ichimoku pretty much shows me some things, and plus I look at fractal levels, so I really don't need to do that. All right, and if there was any level that I would look at, it would be the 50, 38.2. Those would be the two main levels that I would look at. Ichimoku's also would be a third, which would be 30% basically. So I look at, I don't need to put a third in there, so I just stay with the 38.2. But let's go back to the daily. What I'm going to do, guys, up here, I'm going to, just so I can catch, so let's go back to the weekly again. So if we're going to stay here and drop, right, if we're going to drop off of this resistance point, because you're also hitting that cloud level, right, that flat cloud. So if we're going to drop here, who is thinking about this breaking to the upside? I mean, I'm not telling you it can't. The probabilities are higher that it won't break to the upside. The probabilities are higher that it'll drop to the downside, because you're at resistance. Big C clamp here, and the market probably drops. All right, you could see it already starting to show you that. Kind of like a parabolic move, flattening out up here. So let's go back to the daily. So if that's going to be the case, I just showed you that upper level. Price is getting at that upper level on the daily time frame. I'm probably going to look to get short on price action at this level. Now I'd love to see a rejection. I mean, give me something easy to get into the market. All right, but sometimes the price action doesn't give you anything easy, and you just have to pay attention to it. I did a session with Al Brooks, and he was talking about his price action trading, and just from like the first half hour listening to the guy, told me some things that I wasn't really paying attention to either. So I started really paying attention to them more, basically breaking those lows and highs. That's something I always used to think about and look at. And then I somehow got off track. But now I'm looking at the market, and when the market makes a high up here or gets up to this level, I want to see the next candle violate the previous low for me to start getting into the market. And I want to start out with a good stop loss, because where are your stops going to get taken out? If anything, you're going to see this push higher, get all the people that are looking for the breakout, and then drop to the downside. So you'll come back here and say, well, he said to take this short. I'm not listening to him because it's breaking out. And then next couple days later, the day later or so, you come back and you see that you got stopped out because the market pushed you higher to get your stop loss and then dropped to the downside, taking your money and running with it. All right. So another safe way to enter the market is just wait for I prefer to get this bounce off of the resistance, but you could also wait to see if we violate this fractal level. Now we may make a higher fractal because you could see we haven't violated any of these fractals, right? We haven't. So breaking this fractal and closing below is the start of possible new trend to the downside. All right. So that's what I'm looking at with Aussie yen. Aussie New Zealand dollar. I wish I didn't have anything on my chart just to do basic analysis, but I'm doing it for you guys here. So someone's saying, what's a C-clamp? Let me go back. I just was talking about it, but I'll go back real quick. See, the C-clamp is with this Ichimoku right here. Doesn't this look like a big C-clamp that you use, one of those big C-clamp tools? That's big distance right there. That's a C-clamp. There's too much gap here, too much distance. Go back on your chart, see if you see that anywhere else. And when you do see it, see what happens with the market. What happens to the market when these two get too far apart? And this isn't even that far, and the market still corrected itself. Here's a big C-clamp down here. See how it was? Now, it's not super smooth where the market came back, but that's what it did. All right. Sometimes the price action is not as smooth as you want it, but it didn't go below the low. And then the market went higher. All right. Because you got a big clamp and the market wants to, a perfect market is a market that's in equilibrium because you have equal buyers and sellers. And that's what wants to happen here. It doesn't want to be all buyers or all sellers. At this point, it's mostly buyers getting up here. But now the sellers start to get into the market and it drops. Yeah, you never heard that term before? I know that. All right, so looking at the Aussie New Zealand dollar, is that one that I wanted to look at? Let me make sure I want to look at all the one. Yeah, that's one. And what I wanted to show you guys, let's go to the monthly first. All right, so this is the monthly. We're breaking out of this level. I think the market's flat here. So what I see, just looking at the market here, is I think it's flat. Look at, so basically you could see this market ranging in this area pretty flat, not doing much. All right, so I think if it's this flat, now it is showing kind of like a descending triangle pattern maybe. And if I drew the line on here, I know that we broke the level with this candle. All right, so we may see the market push back up to this high here in time. So if that's the case, if we're pushing back up, that's my measured move is pretty much right to that point. My measured move off of the weekly. I'm gonna go to the weekly time frame now. When I look at the weekly, here's my measured move. What's a measured move? Everyone probably knows that, right? But in case you don't, I use these trim-based fib extension tool. I have levels drawn in here already. The main level is going to be the 1-to-1 ratio. See where my measured move is right here? Right there at that level. It's going to be about 1.14551. So that means this leg right here, let's even take that off the chart. We don't even need that. Let's do this. Actually, we could do this. See this level? What I'm saying is the market's going to create the same level. This is 1, 2, or A, B. Then it corrects down to C, and we're shooting for D. Or it's 1, 2, 3, and we're shooting for 4. Either way, we're shooting for 4 or D. This is always going to be 3. I always usually trade at the 3 level. There's going to be another 3 level, and I'm going to show you it in a minute. But this leg, I'm saying, is going to be a measured move, which means it's going to go from this point to that point. That'll be the measured move. So this is however many pips this is, going to be pretty close to that move, maybe. All right. Now it's not going to go straight up there, but that's where it's going to be overall hitting. Always, yeah, the end of the N wave, which I could start using more Ichimoku terminology here and give you basically your observation levels, which would be your E, V, N, and your NT levels. But I'm not going to. Well, let's do it quick. Whoops. Let's do it real quick. So let's find our E level. Our E level is going to be farther than the measured move level. This is going to be the E level right there, way up here at about 117,706. This is going to be your N level, right where I told you where the measured move is. That's always going to be a N level. Is always going to be a measured move. Let's see what your NT level is going to be. Well, let's do your V level first. Your V level is going to be from here, and then I'm going to go see here. That's going to be your V level at about 111,978, and then your NT level is going to be approximately at the 111,330 level. So those levels, if you mark them on your chart, if you go back and listen to what I just said, every level, if you make a line at those levels, that's where you're going to find the market may have issues. So the NT level is going to be should be the closest level. I don't think the V level was as close, but see, this is a big distance here, so you get a big NT level. So we could see the market pausing at this NT level here, which is 111,330. Okay. Yeah, that wave theory and observation theory together is awesome. And then you throw in the time analysis, then you're really talking. But it takes more time with all that. I mean, it's easy to do the wave and observation theory. And if you can measure your levels just like I did real quick and draw them on your chart real quick, it doesn't take any time really. But then when you start talking about time, as far as time periods, it gets a little deeper because now there's different scenarios. Equal time and stuff like that, so it gets a little bit different. But let's continue where we were. So see that rejection. With that rejection, I'm believing that the market may correct itself. So I'm looking at that structure level right there. I'm looking for the market to correct back at that structure level, correct back to this structure level. And Ichimoku is not my base trading. I'm going to show you my base trading in a minute. And also I'm going to put a big video out about my base trading in the next day or two. I got it all made up, just been so lazy to do it. This was easier for me to do than showing you that. So, but we got a rejection here. This is the low here. That's on the weekly. And let's mark this level too, because it's going to be a point of relevance. So when we go to the daily, we're thinking that the market may correct back into this zone here. So if it does, it'll be correcting back near Kijinsen. All right, and then we may see the market push back to the upside. I'm not interested in getting into this market right yet because even on this daily time frame, you see the rejection, right? And then what happened? We started trading inside, and you also got a P wave developing right here. All right, so the P wave now, if I'm wrong, what's going to happen is the market's not going to correct because we got a P wave here. We could see the market just break to the upside. Now, P wave doesn't tell you it's going to move to the upside or downside. A lot of times it moves to the same direction that it came from. So let me draw that P wave out. Show you what that is. This is a P wave in Ichimoku developing. And we know this pretty much like a flag pattern. But that's basically a P wave. Now a lot of times you're going to see it break to the upside because it came from the upside. Pause and then goes to the upside. That doesn't mean it's going to. It could also break to the downside here and go to my level where I'm looking to get into the trade. This is where I'm looking to trade it. If it's going to break out of here, I'm not worried because once it breaks out, I don't trade that breakout. What I'll do is, again, here's my trading concept. I'll wait for this level to be taken out. Once the market takes, if it's going to not drop to the downside, it's going to take this level out right here. What I always do is once the market breaks that level, so let's say this is the market, this red line. Before it even gets anywhere, I know I want to trade right here. And I'm going to show you some other levels. I'm waiting for the market to come back here. And the market comes back here, I trade. Let me show you what, guys, that it's fact, not fiction. I'm going to show you on this chart. I didn't make this up because I can't make this up. Because I didn't know I was going to show you this. So I'm going to show you, if you are a patient trader and don't have anything on your chart and just look at fractal levels, you will make a lot of money and probably have less losing trades because you'll trade the direction of the market. Because look, the market was trending a little bit to the downside. Well, you had an upside move here, then it corrected a little bit. So in the correction, it's breaking bear fractals. See, it breaks these lower fractals, goes lower every time. But then the market decides to break this bull fractal. First time breaking it right there. When it breaks it, guys, you know what I'm doing? I'm marking it. I'm marked the level. It broke right here, and I just sit back patiently and wait. And what does it do? It comes back to my level, gives me a nice price action entry. Boom, there's my trade. So you missed that one. Now in a trend, you'd be lucky to get 3 of these. But if you catch one of these, you could catch big money. But then in the next time, the market moves higher. The market is up here. It's broken this fractal. In this case, I make this into a zone because it has a good wick on it. So it broke, came right back, gives me a long opportunity. So every time it does that, I just keep following the markets. Now here we're on the third one, the 1, 2, and the third one. We broke and we just came back in touch. Now what you need to do here, this is a daily time frame. You need to go to your 4-hour time frame before you touch and trade the 4 hours so that you're not getting an entry way up here, because 4 hour will give you a lower entry. All right, so I already have 1, 2, 3 trades, now 4 trades, and then if the market violates this upper one, I'm going to be doing the same thing. Now if it violates the lower point, I'm going to stay with my long analysis, because I am looking for the big picture for the market to come back to this point, because I'm thinking we're going to be in a bull market based off of what you see here, because we talked about moving here, and that measured move takes us to that point from the weekly time frame, right? So hopefully you guys understand that. Okay, any questions? I'm going to Aussie US dollar. Aussie US dollar, look at the monthly we start out with. Now, remember how I told you about these fractal levels and we break and come back to it? So we did that once already. So see this fractal level? Mark this fractal level. I don't usually do it on the monthly because the zones are too big. So I won't do it on a monthly time frame. But I am still going to do it because it still does the same thing. All right, but once you broke this fractal level, you didn't really break this one, but you came back to the upper part of it right here, and then dropped. But you never really broke this one, which is the thing. Now this, you came back to it again. Now we slightly broke above the level, but we got indecision at the top. So this could just be catching traders up here, and then the market may drop. I don't know if we're going to stay bearish, but we are bearish. So there's nothing for me to say, oh, all of a sudden the market's going to just keep on going higher and higher. The market is bearish. This is a correction. I'm looking to get back to the downside with the market. So if I'm thinking that way, I'm going to remove this zone because it's too big on here. And I'm going to use this zone that I have right here marked. When I go to the weekly time frame, now you're looking at the weekly time frame. What's happening on the weekly? You got a big C clamp. Some signs of what's going on with the market. That tells you a lot. You got a big C clamp like that, the market is not going anywhere. Trust me. It's going to sit here and range or drop. It may range for a while, then drop. But it's probably not going to go farther for a while until Kijinson can catch up a little bit more. Go back and look on your charts and see if I'm wrong or right. You don't even see big C clamps like that a lot. And when you do, you got to pay attention to them. Even looking in this bearish market, you got kind of a deep C clamp. It wasn't that big, but the market corrected itself after it got that big C clamp. So that's something you need to pay attention to, because most traders will do this. It's a bullish market, I'm going long. It's a disequilibrium market. You're going to be wrong. All right, so what you're looking at is, look at these rejections up here. And then so now what I really want to see is the market close below this level. This is the last rejection here, big rejection. Got a little bit of small candle for the last month. This month didn't really get much of a move. Should see the market start to drop to the downside. I'm looking at that move to the downside. So then that means when I go to the daily, what I'm looking at, I think we may see here, is this. So you got a small head and shoulders developing. You may see a little push higher again, and then a break. Now this is the level we want to break. Now again, I'm not going to trade the breakout level. And if I take Ichimoku off my chart, you won't even question what I'm saying. But you see Ichimoku on here and you're saying it's bullish, you're going to follow that. So the thing that I'm looking at also, you do have this fractal level on the daily time frame. Let's go to this level here. What I'm going to do is draw a zone right here. Well, actually, I can't. I'll put it right here. This is the last fractal. If it violates to the downside, I'm going to wait for the correction. Now, let me show you again. I don't even have to look at the charts. I know this happens in a trend a couple times. So I wait for that bounce there. It didn't quite come to that one, but then I wait for the next one. It came back to that one, right? Then I wait for the next one. It came back. And then here you didn't really have any. And then you had one right here where we came back and we got a trade, came back again, got a trade. So now we're looking for the violation of this level. The move down will signify that we're starting to see the weakness from here, right? So on the daily time frame, it's going to happen first. So that's what I'm looking at on Aussie US dollar. And I do have divergence on RSI, as you see. Nice divergence, bearish divergence. This is going to the upside, this is going to the downside. I usually only count divergence at a support and resistance level, and I don't really know. We might have a level here, but I didn't really draw it out. So that's some divergence. You're probably going to see that market drop. All right. All right, so I'm going to move on to the next. I got a couple more. Swiss franc yen. Let's go to monthly. All right, so see this level right here? Look at that resistance point, and we're back at it again. So this may not develop as soon as we want to see it develop, because the monthly candle just hit this level and could even push up to the top of the level. All right, Ichimoku's crisscrossing, so Ichimoku's confused. He doesn't know what to do. All right, so when I see that market, and I don't see any kind of wave pattern as far as a P wave or Y wave, because that's what you'll see here. Now, what I talk about trading, I'm talking about there's the waves that you weren't considering are P wave, Y wave, S wave, N wave. And you also got an I wave and a V wave, which form your N wave. But the market moves in N wave, so it basically moves. When people say an N wave, it's moving in a 1, 2, 3 formation. And I'll show you on a smaller time frame because we got more chart to show you. But I could show you right here: 1, 2, 3. All right, 1, 2, and then now we're flat. So if you see a 1, 2, 3, like if just look up on Google, look up 1, 2, 3 pattern, 1, 2, 3 reversal, 1, 2, 3 continuation. That's really the same thing as Ichimoku N wave. All right, because that's going to really be a V wave, but it's trying to complete the wave, which would be the 1, 2, 3, 4. That would be an N wave right there. All right, so I can't get too much deeper in that. I'll be here all night. So I'm going to go to let's go to weekly real quick. Trying to show you some opportunities. Now we're inside trading on the weekly. And again, see the structure level? And we're at resistance. Now I'm probably going to look for a trade up here on the daily to short back to this level. I'm going to look for my trade up here, but I'm going to go to the daily. You can see we're inside right here, so we haven't violated anything. All right, so the big outside bar with inside candles. And then we go to the daily. You may be seeing this ultimate high right here. So let's see. We got a little bit. I wouldn't even say we have divergence, really. We don't, actually. I mean, we do big term if you go for the big picture because you got it from here. But just from in this area, we don't really have divergence. So I'm going to look at the market right here. If we can't violate this level, if we basically can't violate this level, you'll probably see some kind of a head and shoulders develop up here. And then probably see this level violated down here. Now, see how I told you I always look for the market to break my level and come back? See how it broke the fractal level and came back, and then you got your long trade. But now you're thinking you can't get through this level. This is also a S wave trade in Ichimoku if I look at it. So again, I'm going to show you guys that this is true. Started breaking bull fractals down here. Did you return back? You broke this one. Did you return back to it and give you price action entry to go long? Yes, it did. And look how big that trade would have been for you. So you mark the next one right here. Did it come back? No, it didn't. All right. So the next one that got violated was right here. Did it break and come back? Yes, it did. You could have caught a good trade right there. Did it break right here? This one right here. I make this into a little zone, but it broke right here and came back, didn't it? Yes, it did. You could have caught a good trade right there. Did it break right here and come back? Yes, it did. You could have caught a good trade right there. Did it break right here and come back? Yes, it did. You could have caught this trade right here, but it may not be going much farther. All right. So we'll see if it violates this level. Then we'll just continue with this upside move. And I don't think we're going to get through this level up here. All right. I think this zone is going to stop us. Rudy, you said you see I'm live. What a blessing. I'm live when you see me on the regular things. You're just late with it, but I was live at that point. But yeah, I'm glad to be here. Hopefully I could do this more often. I do have some lag, so I want to try to get that straight too. So it's really my first time. I want to make sure we're good, but we'll see. Let's go to the next one. This is on my list, EuroCAD, but it's not ready yet. So how I mark the market every day, I look at the markets. I go from top to bottom. I'll go through all the time frames, and everything green is something I'm really looking at. Everything yellow, I'm not quite ready yet. I flag my marks, and then everything I'm going to trade or getting ready to get to a trade, like say, let's go backwards. Let's go back here. I'm going to go right. Let's go to a good point where you could see what I'm trying to show you. Let's go to this point right here. Let's go right here. Guys, do you know that when the market is right here, and I'm going to remove this, and any of my people that trade with me, any of the people that are in my membership will tell you that I already know where this trade is. So while traders are stressing about this long move, I'm already telling my guys, hey guys, be patient. Here's where your trade is going to be. So on this day, right there, I tell my traders in my group, I say, guys, don't worry. Let everybody cry about the missed move. It's coming back to this point. Let's trade it at that point. So just be patient, sit still. You got to continue this N wave here. See it? So you got 1, 2, 3, shooting for 4. That's not the end of 4. So if you're patient, you catch that because the market came right back there. Now you got to go to a lower time frame to get a better entry, but you could still trade the regular daily time frame. And then nice price action on daily, and then the market's gone. See? So that's what we trade and look for. And I tell people this all the time. Now some people just aren't patient enough to wait for it, and they just think they got to be in that. But I just showed you on this trend how many times it happened. And I showed you on a previous pair. The markets are fractal in nature. I don't trade Ichimoku 24/7. I trade fractals 24/7. I look at Ichimoku basically for, sometimes I like to look at it for looking at like bounces off Tinkerson and Keatonson, but I really already have my trades. But people know me for trading Ichimoku, so that's why I'm talking Ichimoku. Yeah, so we're looking to see if we can maybe short this point, because we're looking at, if we take everything off of our chart, we're looking at the structure level. And when we talked about it, we looked back at this on the monthly time frame. You could see the strong support and resistance, the resistance points you are right here. So that's major, that's big. All right. So I got a couple more I want to show you. Euro Swiss franc, let's look at that. And on a monthly time frame, what did the market do again that I showed you? It even does it on the monthly. So let me show you. The market was breaking bull fractals. We did come back to this level many months later, right here. But the market continued bearish at this point. Now, I'm not telling you it's 100%, but it's high probability trading. So now we broke this first fractal right here. So let me try to show you. When we broke this first fractal right here, we had marked this level as a zone. The market drops below, comes back, touches, you're short. You got opportunities to get short. I don't worry about missing a move, guys, because it's coming back. So the next thing I do is the very next one, I prepare to trade again. And I didn't get an opportunity this time. But what if I just catch this one? I'm trading all the way down to here probably. But I didn't get an opportunity here because it didn't come back. All right, and it wouldn't have been a zone here because it didn't have a wick. So it would have just been a nice fractal level right here. And it broke and didn't come back. All right. So now what I'm looking at is it broke this one. See, it got way down here. When it was way down here, you know what I was saying? Be patient, guys. It's coming back. But traders cannot be patient to look and wait for this. So what I do, there's other pairs to look at too while you're waiting for this. And I'm not going to do it on the monthly, so I do it on the daily. But if I'm showing you this on the daily, I'm showing you this on the monthly, I show you this on the weekly, it works on the 1 minute, 2 minute, 3 minute, 6 minute, 8 minute, 25 minute, 30 minute, 1 hour, 10 hour, 6 hour, 24 hour, whatever you do. The markets are fractal in nature. It works on all time frames, what I'm saying. What I do is I put an alert right here when the market's down here. I want to be alerted a little bit before it gets there so I can start being prepared to get my entry short. Now, big rejection here. You wouldn't have had a chance to get in, still had a bull candle. Now we got a good rejection with a bear candle. Probably going to see a short here. If we're trading a monthly time frame, we would look at entering the market at this low right here. But we can go lower to get into the market. So we could go to, let's look at the weekly real quick. Now see how we're farming here. Now, what I don't like, this is sometime I get it caught in between trades, but the market's still bearish, so I got to pay attention to that. All right, but when you look at the market, if you look at it like this, you're going to be confused because you only see this much of the market. You need to see what the market's doing. Look at the market, guys. Look at the whole thing, then start to decide what it's doing. It's bearish. All right, so when you look at that, did it come back to this fractal level that it broke? Because see, that was the last bear fractal that it broke on the weekly time frame. See, it dropped all the way down, and this is the first time coming back to this level, and it dropped. So I told you this on the weekly now. And I could show you again, like through the whole trend, how it comes back to the level most of the time. See this level we broke right here? We came back to it. When the market was down here, I already knew I wanted to trade up here. And I got the trade opportunity and the market drops. So now the market, when we go to this monthly time frame again, we're looking at this rejection right here. So with that, I'm going straight to the daily. This one's not clean for me, but I think like you could see how we're flat here with a ugly price action, market not giving you much. I'm thinking we're going to see when we see the violation of this level here at about 107, 192, that's where we could get into the short trade for the breakout traders. But again, for me, what it will be this, not the breakout trade. It'll be this trade. And I don't care if I miss the trade. It'll be this. And then I wait, and it comes back, and I get the same trade. Breakout traders got even better sometime, and I got higher probability, and I got a support and resistance level to use, and then I go for that, and I mark the end wave, mark my targets. I always look for that level from support and resistance where it may be. Boom. Oh, I just moved my good level, but that's all right. So that's what we'll be looking at, stuff like that. Now, we may not get to that point because you're going to have a lot of structure in between that you need to pay attention to. So mark those levels to see how far the market could get down to. Mark your structure levels because there's 3 of them, 3 easy ones right here that I just showed you right here. And then you want to see if the market could get all the way back down to this point. All right. All right, so that's going to be it for the Euro Swiss franc. Let's move on. I got 1, 2, 3, 4, 5, 6. I still got 6 to go. I got to get moving. I'm going to go to the monthly. And I don't know why I bring this one up, because I don't really love this one. I mean, we came back to the fractal level, but I got 2. I don't really love it. We did come back to the level, and we're coming back again. and I marked this level right here. You could see the body right there. And then I would have made it into a zone. I don't make monthly zones though because they're too big. So it really doesn't matter. But we are coming back to that point right here. I'm not going to pay much attention to this one. I don't love it. I'll see what's happening here. We do have some distance. All right, so with that distance, we may see the drop because we are coming up on this resistance point right here. And I'm going to mark it from here because we have this, then we have this, then that's where we are. So we may see it drop. We're inside trading right now. We are starting to develop a little P wave formation. So we might see it drop to the downside. What I'm going to do is I'll post this in the chat room when I see it happen. So all these trades, when they start to really develop, I'll post them in the chat room. Everybody will get the opportunity to catch the trade. So I'll post it as they go. But I talk about it beforehand so you can catch it without me posting it. That's what I talk to traders about. I say every Sunday we have this same session we're doing here right now, every Sunday. And I show you the trades before they even happen. So when they happen, you don't need me to say, oh, well, there's a trade alert today on this and that. If you mark your levels, put trade alerts, not alerts, sorry, put price alerts. So let's say you're going to trade when the market gets back to this level right here, this zone. You make it into a zone. Well, just mark an alert here, guys. Add an alert. And boom. The market's it's gonna send me a notification. I'm gonna know. Hit boom. You got an alert. When the market gets to that level, that's when you start paying attention to it. That's when you start looking for the trade that we're talking about. You don't need you don't need trade alerts from me to send to you because I'm already telling you today what to look for. Now on this one, that's not the level I'm really looking at. I'm just giving you for instance. One great thing about Ichimoku is the context it provides. For me, a chart without Ichimoku is like a map without the roads marked on. I like the 1852-104 settings. Yeah. I look at the fractals as more of the map because they tell the real picture. Ichimoku is still not up. It doesn't do anything with price as far as time. Even if you look at Ichimoku theories, none of the theories are based on any of this, like your cloud and your TK crossovers and all that junk. It's not based on that. It's based on time and price and levels. It's not really based on anything that you're seeing with these crossovers and with Tingens and Kijens and so forth. Now there are some things that are added into there, but the main concepts don't really focus on that. All right, so let's move on. Euro USD. This is developing a big C clamp, and what could happen here? Let's go to the monthly first. So monthly's still pushing, and it could still push even higher. I don't know, but it's starting to show signs of weakness here with this rejection. All right, so I was thinking maybe it could push up to the cloud, the flat cloud. These are strong levels. All right, it could push up to the flat cloud, but I don't think it will. I think we're starting to see the decline now. Let's go to the weekly. With the weekly here, I'm looking at this level right here and probably looking to short back to either this point at 114.915 or this zone right here. All right, because the market's trying to drop back to the downside. So this is basically a correction from the weekly time frame, which would be a bigger trend on the daily time frame. Now, what would have to happen is we close below this fractal. But again, what's going to happen for me, I'm not going to trade that fractal break because that's what that is. That's a fractal break. All right, a fractal break trade that we talk about entering. So I show you how to enter the fractal break trade, which is basically simple. But then the better trade would be this S-wave trade. All right, which would be the violation here, and then the pullback to this level. Now you're seeing this maybe a head and shoulders develop here. And then we break. I don't take the break, I take the bounce, and then look for it to move down to maybe this level, 114.915, or to this zone here before it continues on its way back to the upside, quite possibly. All right, so don't have anything on there yet, but those are the things you're going to be looking for. So how I tell you guys again, yeah, this may push up a little bit. It's not going to get past this level more than likely. It's going to push. Then we're going to see a good correction. Mark your alert. Put your price alert right there somewhere, because you want to know when you violate this level. And if you're going to trade the breakout, you want to trade that breakout. You want to know it when that happens. And then the second thing is, if you're not going to trade that breakout and you're going to trade the correction, you still want to have a price alert there so you can look at it when it comes back. And this is our target, and that's our second target before the market probably, are we going to be bullish more than likely? Might not be bullish. It's bearish on a monthly. Might continue even deeper. Pretty bearish all over the place. All right, now it could be a new trend that's trying to get up to these highs here, but we'll see. If it's going to be, we're still going to catch the trade down to these levels. And then that means we catch that trade down to these levels and we still can trade it up to these points. Use your N waves, use your Ichimoku observation theory to find out where your targets are. Okay? Let's move to the next. I have 3 more that I want to show you, actually 4, so I'm going to run through these real quick. Pound Aussie, big giant C clamp. That's all that's on my mind. And you got structure down here all over the place. You could see it. So the market's really going to have a hard time getting through there right now. So what it's telling me is that probably seeing the market bounce off of this lower level here, push up to the upside. This is a monster C clamp. What's the distance here? Over 1,200 bars, about 1,200 bars. 1,200 pips, 1,200 pip move distance here. Go back on your chart and find another 1,200 distance with Ichimoku. Find me another one. You won't, because I don't see one on here. That's a big sign for me. Big sign. All right, and plus you got support you're bouncing off of. So that's a big sign. You probably see that thing move up to the move to the higher. Could one pay for a lifetime membership in BTC? Nah. I'm sorry. So let's go to the week. Well, that's the weekly. Let's look at the monthly. Now my charts are going slow, which means I may be getting ready to get out of here. All right, so we got the daily. Let's go back to the monthly. I want to see the monthly. All right, no clamp. We do have a crossover, but really we got too many crossovers here, and the market is flat. Too many, the flat cloud. You got a flat cloud, so the market's kind of rangy. I don't see any real structure that I want to discuss on that point. Let's go to the daily. So if we're going to get what I'm talking about, I took a trade in here, but I didn't want to sit here, so I took the bounce off of this level. So remember how I told you guys the market comes back? That's what it did. I took a trade when we came back to this level. We broke this level right here, and we came back right here. I took this trade, but then I found we were sitting in the range, and when I got back to the top, I got out because I didn't want to sit here. Because now the next thing you're going to see is probably 3-row reversal, okay? Because first of all, you could trade this a couple ways. You're going to get probably a Kumo breakout to the upside. You already got a future that's bright. You already got Chico span above price. So when you get that Kumo breakout, measure your move. All right, so you're still going to see an N wave, and then you're going to still shoot for your targets. If you're going to mark your N wave, it's going to be just like this. 1, 2, and you're going to have a wave there. This is a V wave now. This is an I wave, V wave, and then N wave. Could see that thing come up. So you're going to find your targets. Again, I'm going to show you where your targets are. If you're going to trade this, now my best thing is you want to get the trade again back down at this lower level. So you want to trade long because we're flat right here. So what I really like to do is when I'm flat like this, just box it in like I have here and go down to like the 4 hour or the 1 hour, right? Go down to the hourly and then trade these levels. You can trade these levels back and forth. All right, that's what I really like to do when I see a market like this. But in this case, let's just look at this where our targets would be, because you have a V wave and extension for N wave would be, this would be where your N wave target will be. So in Ichimoku, you got the targets I told you, which would be your NT, N, V, and E levels. So if we want to find those targets again, we first measure this AB leg. and that's going to make the 1 to 1. That's going to make the double move. So that'll be from A to B. Add that A to B onto B. That will give you your E level. That's going to be your E level target. And then the 1 to 1 ratio is going to be your N level, which is going to be right here. So your E level is going to be about 191179. Your N level is going to be about 188434. Then your V level is going to be about 186823, and then your NT level is going to be about approximately 185291. So those will be your levels. All right, so that's what you would be shooting for when you trade this. That means you would shoot for those levels, the market to go to one of those levels. Okay. Why would 75% of my audience come here for BTC trading? I don't believe that's true. That's for sure. All right. So again, you're going to see the breakout here. And you got a Kumo breakout and you shoot for those levels. Let's move on so I can get out. New Zealand dollar, yen. Let's go to the monthly. Again, remember I told you the market comes back to these levels? Well, we're back to that level. So I'm thinking the market may drop here because we had a rejection here. So with that rejection, we're looking for the market to drop to the downside. You know how I told you I mark with alerts? See how I already have the alert set for where the possible entry is on the weekly time, on the monthly time frame, but I'm going to catch it before that. Let's go to the weekly real quick. So I really want to see a break below this level right here and catch that. Now we are bullish with the crossover, but again, if you only look at that kind of stuff, you're blind, because look, you got a crossover here in the market, broke back to the downside. All right, you had a crossover there, you had a crossover there, you had a crossover here. This is a bear market. All right, and we are breaking bear fractals. Now we did break this last bull fractal, so what could happen is the market may only return to this level right there. So if we get a short, we may only get to that point. Now let's go to the daily. So for my short, the market's already doing the things that I tell you that it probably will do. Now it's a little sloppy up here still. And I'm not in love with this one because the first one is always the hardest one. So we're looking at this. We broke. See how we broke this level, which is this level. And actually you want to look at this one, but we're looking at this one. So when you broke, you retraced back to this point, and then maybe we'll get a short here. All right, so that's what we're looking at on the daily. So looking at the short, Ichimoku starting to get a bearish future. You got Chico span below price, TK crossovers bearish. I'm not going to wait for the Kumo breakout at that point. I'm going to look for this short trade now. All right, so what I'll do, I'll keep you updated on the chat room about this. No, I trade stocks as well. Okay, I trade stocks, forex. I don't trade a lot of crypto anymore. All right, so let's go to the next one. We have what? Two left. New Zealand dollar, USD, and then USD yen. USD yen. So Jerome. I teach you the same month after month. Yep, year after year. Yes, sir. Thank you, Jerome. If I have a chance, which pairs to avoid and not pay overnight fees? I can't do that today, but you know, another time. I don't see the profit for me with crypto. All right, I make way more better profit than, I mean, I guess, I don't know. I just really guess I never really got used to really loving crypto. I guess it's just like a preference, maybe. You know, everybody jumped on that boat because it was a big volatile market, a big moving market, but it's broken down, but pretty much like everything else now. It doesn't have the moves like it did. I mean, you still get good moves, and you get good moves in forex, but people just like that. I guess it's just my preference. It's like, what if I don't want to trade penny stocks? Why not? You know what I mean? So let's look at this New Zealand dollar. Let's go to the monthly. Now, the reason I'm looking at this, I probably don't really have much on this that I want to give you because I'm late with it. Okay, because we already came back to my level. See my level? And then we dropped below it and came back. Guys, this is a strong concept. Very strong concept. And if you can't trade without Ichimoku, you can still trade Ichimoku with this, because what you do is this. When the market is bearish, with a TK crossover that's bearish, every time you break a bear fractal with the market, then you trade the TK crossover direction and you look for the bounce back to the fractal level. You would have broke this fractal and came right back to it, see? And then you would have go down to this one right here. You broke it. Now you didn't return on this point, but you came back here. This was probably a news candle, so that probably messed you up right there. And then the rest of them you never really came back to. I mean, you did come back to this one, but I wouldn't count this one. This one would have been hard for me to count because the wick was so big, and I wouldn't have known exactly where the level was that it was going to return. I don't mind marking a level that's this big. You see what I'm saying? This is a smaller zone, and I can understand that. But to understand this big giant zone way up here, I don't even look at that. What it did was come back to the bottom of it right here, and then drop a tiny bit and then start to change direction. So with that said, I really don't want to show you nothing here because I think I'm late with it. And I'm going to go to the daily. I am on the daily. Coming off the monthly. We reject it. That's what I was looking at, the rejection of this level, but we went a little bit higher. Go back to the weekly. And then we're bouncing, but with a big C clamp though. I'm cautious of this one. Don't really like it. Not going to really discuss it. A break of this level will give me some validity. All right, because we do have one bounce here. So another bounce would really be strong. All right, last one, USD yen. Let's take this off the chart. Let's go to the monthly, see why we're looking at this. Again, this doesn't look like one that I want to pay attention to, and I don't think it is. I don't know why I got it marked. It's not really one I want to pay attention to. When I got bad price action, I really don't trade these fractal levels. Also, the fractal levels do not count when the market is flat and ranging. Then you just basically count this. You just look at this. So you won't look at the fractal levels. You'll look more at the support and resistance levels. So you'll mark your levels with zones. So that would be a nice level there. And I would make it into a zone. I would mark it here. At the bottom, I would put it right there. So this is support and resistance. So that's a support level. All right. So that this whole area I could look at trading long when the market bounces there. All right. But you got a big giant descending triangle pattern. You may see this thing break to the downside because it'll continue that N wave pattern. Now, actually, when I get to the bigger market, when I look at the big thing, this could be just a correction and then a continuation of this leg. All right. But yeah, that's what I'm looking at. I don't really see much there. So I'm pretty much done. So I have any questions, I'll answer them real quick. Oh yeah, C-clamp bearish or consolidation. Yeah, that C-clamp is a major thing. So watch that. All right. But hopefully this helped you guys out a little bit. What I'll probably do is once you see it, you already saw it, I'll probably take the recording down, edit it, and put it back up here for you. So if you're going to watch it, better watch it again quick because it's going to be gone. Then I'll bring it back. But guys, I appreciate you guys coming out to me. I'll start letting you guys know when I'm going to do this. I just tested this. I didn't do it. This is the first time I did it. I'm going to see why I do have some lag because, look, I'm waving. And how long before that wave comes up? That's a good while. Yeah, that's like almost 15 seconds before I saw my wave come up. But Lil Rex said helped a lot. Thank you very much. Thank you, Lil Rex. DJ Day, totally understood. Thank you, my brother. Thank you very much. Jerome, thank you. Sheila P, thank you. Heinz, Thank you for the first time. Great. Thank you, my friend. God bless you guys. I'm getting ready to get out of here. We'll be doing this at least once a week. All right. And then the second thing, Quentin, my man, good to see you in here. What we'll be doing though is we will do this once a week. All right, at least. But if you want to get true content, just visit my site, become a member, lifetime member, and you can attend these whenever I have them. Also our chat room and our courses. Got a whole bunch of courses coming up, more courses. Got a stock course that I'm still working on. I have it done, but I'm just lazy to put it out. And then I have price action course, 2 Ichimoku courses, and what else? Price action, fractal course, what I just talked about today. So basically all the things that I really was talking to you about today. But yeah, I'd like to see you guys. And if not, I still see you here on YouTube. All right. Until next time, guys, have a great one. God bless. So long.